But thank you everybody for joining today. My name is Dave Pike. I'm one of the business development executives here at IDC Worldsource. It's always a great opportunity that we have to spend some time with you folks and educate you on all of the great products that we have with some of our stellar carriers. And of course, Sun Life is, we have Sun Life on, and they're going to share some of their, latest and greatest when it comes to on the juvenile CI side, which living benefits, as you know, is something that I spend a lot of time in working with you folks in. So happy that we have Yusudan here, who's going to be able to share with us some of his insights. So without further ado, Yusudan, I will stop talking. I will allow you to take it from this point moving forward. And of course, I'll be sitting back listening as the rest of us are.
All right. Thank you so much, Dave, for that wonderful introduction. And good afternoon, or if in case you're in BC or in a different time zone, good morning as well. Today, I'm here to talk about our children, juvenile critical illness. It's, to be honest, I know it's recorded, but to be honest, it's a boring PowerPoint, but I'll try to make it dynamic. I'll jump back and forward from our PowerPoint to our advisor site, getting everyone used to our marketing material. Some of them are client facing, so you can even share them with your clients. And there's a poll pop out for advisors in Quebec. So if you are a Quebec licensed advisor with l'IMF, right, our dear IMF, please answer the poll right away. And please put all your question in the Q&A box. I'm monitoring it live while I present. And if I have a chance, I'll answer it as I present and not just to keep everything at the end. Hopefully this will make it more dynamic. So before I start, I have to show you our disclosure slide. So basically this is for information purposes. And the best way to read the disclosure is to take a picture of it and read it afterwards. But everything is for information purposes. I don't think there's any legal and tax issues right now. But then again, CI is a definition-based product. So there might be legal definitions in, but we do have a definition guide for you. And I know that a lot of advisors or the clients of our advisors, they will actually share them with their physician to explore it. So today on the agenda, we're going to talk a bit about protecting children. I don't think I'm going to spend much time on it because protecting children is pretty an obvious need. So it might not be required for me to talk about it a lot. I think child CI is a must. To be honest with you, child CI is a must. I'm a huge believer in living benefits. And especially, sadly, Sun that we don't carry disability, but I do think disability is the fundamental product of human capital protection. But for children, right, they're not working yet. So we have to find another living benefit solution. So it's child CI. I'm going to go into our product a bit and show you what Sun has to offer. We're one of the rare carriers out there that has a independent child CI policy. And lastly, some good to know. So before I start, I'm gonna share this because this is our one-page fact sheet. I'm gonna restart my share. Okay, this is our one-page fact sheet that you can get online, and to just give you an overview of our claim experience with Sun Life. So this is based on 2022 data. So the average claim 88,500. We paid over 62 millions of claims in CI. And the average age is, of course, 51. So a child CI claim is rare, but we do have some experience on child CI. So here are a few good examples of it. From 3 years old, 5 to 15. So we have a number of months enforced until claim. And especially type 1, even one of our wholesalers here at Sun Life, some of you might know him, Mike Ellis. He really had his children really appreciated the type 1 diabetes coverage. So just to give you an idea, you can have this fact sheet online from our website. And it's a very good introduction for CI. Now I'm going to jump back to my PowerPoint. So protecting children, it's a no-brainer, right? You're gonna want to have child card seat. You're locking your child in seatbelt despite the fact they hate it. I remember when I was 6 and I hated the seatbelt, and it just became illegal in Quebec to have the back seat without a seatbelt. So that I remember I hated it, but it turns out to be one of the best lessons I learned in my life. Of course, safety locks, helmet, proper sport equipment. It's you're gonna protect your child no matter what. So child CI becomes really useful, and you can buy it right away when the child is born. You have to wait 30 days. Okay, you have to wait for the child's born. 30 days later, you can get CI. I think life insurance, I think PAR is 15 days for us, but CI is definitely 30 days. So one of the aspect, I'm going to stop here, and I don't think the screen does it justice, the PowerPoint doesn't do it justice, is the impact of the whole family. And a lot of the CI speeches that I've heard in my lifetime are around the emotional impact. But a lot of the wealth impacts gets forgotten because a CI for a child is an especially useful tool for a stop loss asset protection. So what do I mean by a stop loss asset protection? So for me, you have a certain savings. So this is your savings, and you have a certain age that you're gonna want to retire, you're gonna want to travel, but you have a certain timeline. I shouldn't call this age. I should call this a certain time. So basically your clients are investing monthly, hopefully monthly, or yearly, and their investment they're growing. And what happens is if your child gets an illness, what happens is you might have to take time off. You might have to pay for hospital parking. You might experience a lot of additional costs that you didn't expect, because a lot of people believe that healthcare in Canada is pretty free. Depends on your province, right? Depends on your medication. It can be sometimes intense. Just hospital parking is a nightmare. So what happens is you're going to dip into your savings, and then once you dip into your savings, it will affect your future growth. You're going to grow smaller. So the fundamental asset protection of CI is that you're going to pay a certain premium for sure. So the premium might dig into your savings a bit, but if anything happens, if a covered illness happens, you do not need to dig in your savings, right? So it's a stop loss strategy. And also sometimes I can even see in rare occasions a bump and you're saving more because you claimed it on a child CI. So it's really not just the emotional factor that you want to address with child CI. It's really also the parent savings. And I see in the chat a question. So there's a Q&A box on Zoom. You can click a Q&A box and ask me a question anytime. So I was talking about some dig into savings. These are the most common things we see. Really is if you need to dig into your savings, a lot of these stuff can be affected. Your mortgage payment, insurance premiums. You might have to cut down on child activities in the future. So there's a lot of expenses that can be covered with a child CI. And of course, the clients are not compromising on their future. So CI is a pretty smart solution. I'm going to dig into the product more and more. So how does the Sun Life Child CI work? The Sun Life Child CI will last until the child's 24th birthday. Okay, it will last until the 24th birthday. But if you're getting a T75 child CI, a T100 child CI, of course, the coverage continues. It's just that the 24th birthday, the child illnesses go away. Okay, so we have 5 illnesses additional to our, I think, 26 illnesses in our CI. So we call them our group 2 illnesses. So we have 5 additional illnesses covered for children until their 24th birthday. After that, the policy can continue, but you're taking the illnesses away, and you're locking in the low premiums right away. So that's the child CI. And I know there's a burning question for those of you who know our CI. So when your child turns age 18, I'm going to talk about this more later, but at age 18, we're going to remind you of a smoker questionnaire. And if you're a non-smoker, then you get non-smoker rates as an adult. Yeah, so CI is a lump sum claim that I can skip. So I already talked about expenses that I can skip. So more details about the product itself. Yeah, and just a really good question. And underwriting is something not in this PowerPoint that I'm going to address. So I've been seeing a question in the Q&A box. Can a child get CI if their parents don't have CI? Yes. Anything below $150,000 of face amount on your CI, it does not require financial underwriting. So the parents doesn't need to have any coverage, anything below $150,000 of coverage. So from $150,000 to $500,000 of coverage, you have to submit a cover letter. And both parents need to have some sort of critical illness, disability insurance, or long-term care. It can be individual or through your group plan. Okay, it can be group or individual, but please indicate it in the cover letter. Both parents should have some coverage. And if you're going above $500,000 of coverage for a child, at Sun Life, we can go up to $1 million of coverage for juvenile CI, depending on their age. So if you're going from $500,000 above, both parents should have more coverage than their children. And of course, please include it in a cover letter. So that's a great question. So for children, they're covered for 5 additional illnesses that will disappear at their 24th birthday. So here are the 5 illnesses. And of course, cerebral palsy is one of the most popular one, and type 1 diabetes is another one I get asked the most. So these 2 are definitely the most popular ones. And of course, on top of the additional child illnesses, you get all our group 1 illnesses, the 26 full payout. So you get all of these included as well. Something that you might not know about Sun Life, and this is getting really popular in the industry, are partial payout illnesses. So what does partial payout means is if you're in an early stage of the illnesses on my screen right now, you get a partial payout from Sun Life. So the partial payout will be 15% of the benefit amount up to $50,000. And please note, the partial payout do not reduce the coverage of your CI. So that's one of the competitive advantages from the partial payout from Sun Life, is that it does not reduce the CI payout or the return of premium benefits. So this is really nice. I really appreciate these. So this is on top. So technically you can claim above the coverage that you bought with partial payout. Next up, I'll go into the plans in more detail and talk about the plans for child CI. So child CI, right from 30 days to age 17, you can buy them. It'll last until the additional illnesses will last until the 24th birthday. The coverage amount, the lowest minimum is $25,000. And the highest possible is $1 million for juvenile CI. If you need a coverage above 250,000, you do require a special quote. So please come see me, ask my inside sales representative, Joanna, as well. So both of us, we can request a special quotes for you. In child CI, there are 3 choices that you can choose. You can choose our T10, our T75, and our T100. So with the T10, you can renew right up to the insured person's 75th birthday. Our T10 has conversion rights too, right? You can convert your T10. Our T75, you actually have 2 types of payment. You can pay up to age 75 or pay for 15 years. There's even a really special return of premium rider attached to it. I'm going to show you soon. And of course, you can directly buy a T100 for a child. And this has 10 pay, 15 pay, and pay to 100 with guaranteed premiums. So here are our most common optional benefit. So return premium on death. That's really nice. It's there. A lot of people choose it. But the other most common one is the ROPC or E, depends on how you call it in the industry, but return premium on cancellation or expiry. That's the next most popular one. We have total disability waiver. I don't see it much personally. it is there. It is useful, but I don't see it much personally. Owner waiver, it's there. And also the third most popular one has to be long-term care conversion option. I'll dig into it deeper, but long-term care conversion option, our juvenile CI, is actually quite powerful because you don't have to add this rider when you settle the policy. When you sell the policy, when a policy settles, you can settle policy without the rider, and up until age 18, you can choose to add in the rider. Of course, at extra cost, but you don't have to get the rider when you buy the policy. So I really like that option. It's really nice. And our contract will promise that Sun Life will maintain a long-term care product for you. I know a lot of carriers has been exiting the long-term care market lately. Sun Life had 2 long-term care products. Now we're only down to 1. But the CI contract does guarantee that we're going to maintain a long-term care product for this conversion option. So I'm going to spend a while to talk about the ROP on expiry more than on death, because we have a great one for child CI. And this is industry leading and is really special. We had it for a long time, but a lot of people don't know about it. So this is advanced return of premium on cancellation. So what happens with this? So this is an optional benefit. You don't have to, it doesn't come with a policy, but what happens is 75% of the premium are automatically returned when the insured turns 25 or the 15th policy year, whichever is later. So you get money back right after like your kid graduates from university. Normally that's 22, 23 nowadays. But 25 after university, that's a nice post-graduation gift, I can put it that way. The coverage continues. And what happened is the remaining of the premium. So it's the remaining premium, right? You take away the 75 already returned. So the remaining of the premium can be returned if the coverage is canceled after age 40 or the 30th policy age, whichever is later. And this I'll stop here for a second, and I'm going to change to my website and I'll share with you, because this takes me to a really good case study that we have. So just to let everyone know where to find that case study. Yeah, I'm sharing the correct screen. So we have a new site. You're welcome to use it. I find it so much better. I've been asking for this new site for the last 5 years. But anyway, that's a side note. So on health, there's critical illness, but actually don't go there. Go into marketing with brochures, brochure booklet, and yeah, brochures and booklets and fact sheet. Under health, there's critical illness. The first one, they grow up so fast, the plants that grow with them. So in this study, you can see that our critical illness, our child critical illness, will continue for life. So you buy a child critical illness at 5 years old. You can add long-term care conversion option before age 18, at age 18 or before age 18. I need to confirm that. At age 25, you get your advanced ROP, right? 75% of premiums are returned to you. At age 40, you're eligible for the remainder. And at age 60, you can convert your CI into a long-term care policy. So you have a conversion window from age 60 to age 65. And we have the formula to convert with the ROP. It's on our advisory site, but if you don't want to calculate it, let me know. Let my Insight rep know. We can both figure that out for you. So it's really one plan that will last a lifetime. So this is advanced ROP is something that I personally really love about our product. So I can highly recommend that advanced ROP. And another one is return on premium cancellation, expiry at age 35. So for child CI policy, if you don't want the advanced ROP, you can choose ROP at age 35 on the premium. So this is available for the 10 pay and our 15 pay options. And later on, I'll run a few illustrations live with you. And then we're going to look into, instead of taking you through a case study from this PowerPoint, we're going to run through illustrations to see how to quote these and how to illustrate these from in our tool. So just the technical details, I think, but devils are in the details, right? So these technical details on ROP, I find it actually quite important. So the total amount of the ROP, okay, for the policy, paid to policy minus any premium paid for a long-term care conversion option, right? So this is the one of the ROP rules. And then the returnable premium amount for child policy is further reduced by any advance return of premium, right? When you get that advance return of premium at age 25, that's 75%, that reduces your ROP. Partial payout does not reduce your ROP, right? But advance premium does. And the returnable premium amount isn't reduced by any payment size makes for partial payouts. So these are a few good rules to know about the ROP. Long-term care option. Okay, so it can be added to a policy when a child turns 18, not before age 18. So sorry, my mistake. So when the child turns age 18, you have the option to add it. And a short questionnaire is, of course, required for the eligibility. And the option is not available for limited pay plans. So that's the ROP hiccup. So you have to make sure it's not available for limited pay plans. And the total disability waiver. So it's available to pay to age 75 or to pay 100, right? Your 75 pay, your 100 pay is available. And the rules is that if the insured becomes disabled for 6 months or more under the age of 60, Sun Life will waive the premium payment and coverage will continue. And coverage and premium will begin at age 18. And of course, owner waiver, right? It's not that popular, sadly, but it is a good option they can propose to your client. I do see a lot of clients get price sensitive when they add owner waiver. It's not costly, but it's not that cheap as expected. So it's an ish rider that cost wise, but just to go over it, it's a really good, great fit for parents, of course, and can be added only on one owner, right? You cannot be added if you have a joint ownership. You can only be added on one owner. And there's 3 options available: so death, disability, and death and disability, and that is the expensive one. So one of the things that's really working well with our child CI, I'm just doing a quick time check here. I think I'm okay. Are the value added services. So with the value added services, with the child CI, your parents including your parents will get access to Best Doctors. Okay. And Best Doctors are rebranding right now to Teladoc Health. So it's the same service, it's the same everything. It is just rebranded to Teladoc Health. So you get this by day one. You can use it for the insured and you can use it for the parents. So it becomes really powerful. Basically, Best Doctors will offer you a second opinion on your diagnosis. We understand if you're claiming CI, you're running into big trouble, but you don't have to be claiming to use Best Doctors. Best Doctors is active as soon as you buy the policy. So you can use it for any other illnesses that are not covered. It gives a great second opinion. At some point, an advisor told me that Best Doctors will even help you find a physician. So their finder function is really powerful. It's really nice. And really, CI automatically includes Best Doctor with unlimited access to the Best Doctor services. And it's really available anytime your client expects any condition, right? Not you don't need to be claiming. It can be any conditions. You can access Best Doctors, and they just revamped their website. It's really, really nice, especially their physician find function. So the last part and the longest part of the presentation today should be the case study, but I am going to take you back to our advisor site. And before the case study, I just want to share with you some underwriting guidelines. So our underwriting guidelines for child CI, it's really related to our agent amount. So it's really nice, right? Juvenile CI is all non-medical, 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 and non-medical. For new business applications, because a lot of people are using our e-app now, and you can book tele-interview, you can live schedule tele-interview on our e-app, which is really nice. So non-medical can be replaced by the tele-interview. If the client has some privacy issues, they don't want to be, or you don't want to get involved with the health questionnaire, you can replace it by tele-interview. And for child CI, what you need to watch out, okay, are APS guidelines. This is the biggest hiccup for child CIs that I see that causes delay in the case. So when our routine APS amount, so for 0 to 12 months, so 30 days to 12 months, from $250,000 and $1 and up. This is routine APS. What does it mean? It means that you're automatically going to get an APS requirements when you apply for these face amounts. What's good is 13 months to age 40, there's no routine, but it does not mean that the underwriter cannot request an APS, right? It's just, if you're above this amount, you're automatically getting an APS request, but it does not mean the underwriter will not want an APS. So when would an underwriter want an APS below this amount is for recent checkups, okay? So an APS will be required on clients who had checkups other than normal prenatal or employment physicals within 3 months of the application date. So for child, if you're between 13 months and age 40, you had a checkup within the last 3 months, your coverage is above $500,000, $500,001, you're going to have an APS request. For 41 to 50, it's not child anymore, but this just to let you know, the coverage is $250,000 and $1 and above. You're going to have a recent checkup APS request. Out of these two guidelines, there shouldn't be APS, but sometimes depending on answers on the non-medical or the tele-interview, there might be an APS trigger. I haven't seen them recently. It's very rare, but just to warn everyone, the underwriter does have the right to ask for an APS, even if it's outside the agent amount requirements, because the agent amount requirements doesn't ban the underwriter from not requesting an APS. So I have another question that's great on the Q&A box, and I'll pause a bit and answer it. So what if one of the siblings are uninsurable? I'm going to add on top of that, what if the parents are uninsurable, right? Does our requirement change? Yes, our requirement will change. If you have a sibling or parents are uninsurable, that will change the financial underwriting requirements. It will make it more lenient, so you don't have to match the face amount and stuff like that. So for uninsurable reasons, that's a good reason to get more coverage for the child, for the insurable child. So this is a bit on the agent amount requirement for critical illness. So let me go back to the case study. Let me refresh my website. I don't have an IT issue right now, or else that would be quite embarrassing. So if I go into illustrations, our illustrations are really easily accessible. You sign in, you click on top, you get into our illustration tool, and you do critical illness insurance. For critical illness insurance, the first thing I want to show you is the advanced return of premium. So that one causes the most curiosity. So I pick a random age. So it's T75, pay to 75. Let me refresh this. If this refresh doesn't work, you can use your browser refresh, right? Or click F5. You can use your browser refresh to refresh this as well. Just make sure male age 5, non-smoker. All right. And what you have here is you can have the checkbox, right? You can have ROPD. And you can have return premium on cancellation expiry. And here, let me check that box. And you choose advanced. And we can take a look at the report. You can choose advanced. We can take a look at the report. And you have the ROP. Let me go down a bit. Okay, here you go. So you choose at advanced, you have the ROP, you have the ROPD value, you have the ROPCE, so cancellation or expiry. You have that at age 25. So 75% of all premiums paid to that point will be returned to you, one-time lump sum. Your coverage continues. And right here at age 40, the remainder premiums paid will be given to you as a lump sum. And you can have the right to cancel it, right, or to not cancel it. So you can keep the coverage, the policy forever. If you don't cancel it. So that is the ROP, advanced ROP. And the other one for child is on the lifetime and for 10 or 15. So for that, you will not have advanced ROP CE. So you'll only have the option to click age 35. So when you view that report, you'll see the ROP activating at age 35. So I'm just going to make sure I'm sharing the correct stuff. Yes. And then at age 35 forward, you can see the ROP value starting at age 35, and it just goes on from there. Right? And then it just goes on from there, and it's a limited pay. Another thing that you can consider when choosing a policy is to use our quick compare tool. So when you have a policy in place, instead of running different illustration every time, you have a quick compare, and it'll populate you other options, other term plans. So right now it's a T100, but it'll pop in T75, T100. Right now it's a 10 pay, so it'll show you the 15 pay. So with the quick compare, it will even include the cost of the riders. With a quick compare report, you have it very clean on one page. And this is a great summary if you're talking to a client. If our clients are price sensitive, what's happening here? And you can really present it in a clean one pager on our illustration tool. And I'm going to make a quick plug for our adult CI right now. So if you can allow me to make a quick plug, if you go into report design on the tab here, you can design your illustration. There's the advisor report. And also for shared ownership strategies. I know this is not related to juvenile CI, but we do support shared ownership, but only for T75 and T100, only for 75, pay to 75 and pay to 100. But we have a regular shared ownership report. And if you're really planning that, please contact me. We can work out even more different shared ownership report that we can present to the client's accountant and tax experts. So I'm doing a last time check. I am on time. So this is where you can really run your illustration tool. I suggest everyone to give it a try, especially the advanced ROP. It's really nice. Let me go back to T75, just to let everyone know. So it's right here. If you check this box, ROP cancellation, and you can choose the advanced here. And your owner waiver are all down here. So you can add these, build them up as you like. If you're doing analysis, we do have spreadsheets that you can export. So you can just export in Excel the spreadsheet if you want to do your own analysis. One of the things I want to touch on is the long-term care conversion. So I'm going to go through the rules a bit. Let me go back to my advisor site. So this time you don't need to sign in. You're under health and critical illness. So if you go in here and you have our admin details, instead of reading the whole entire advisor guide, the homepage does give you a quick glance at it. So it's really let me find critical illness, child critical care. So this is at a glance. Where are my long-term care conversion options? So here. So here is the conversion and internal replacement, but today focus on child CI and getting off track. So I'm going to focus here. So this is what you can add it to your child CI policy at age 18. And really here are, if you're looking at the calculation, the conversion rules, how does it work? Right now, our long-term care product is Sun RHA. So we have a conversion formula here. It's a bit complicated. I get it. It's a bit tough to read. But basically here's the core rule that you need to know. So the new weekly long-term care insurance benefit will equal to the amount of CI coverage converted divided by 200. So this is the core formula that you need to know. So if your client converts $100,000 of the CI benefit, the new long-term care benefit will be $500 per week. So that's the golden conversion rule. So you can convert between age 60 and age 65. And speaking of RHA, one good thing about RHA is that there's a financial planning opportunity. Let me go back to my PowerPoint. I don't think it's in my PowerPoint. No, it's not in my PowerPoint. But financial planning opportunities is people do realize that T100 CIs are quite expensive, or T75 CIs are pretty expensive. Planning opportunity is you can combine a T10 CI with a RHA product. So with our long-term care product, what happens is you take the premium from your T100 policy or T75 policy, you separate them, you buy a T10 CI, and then you just let the policy lapse at age 65. And age 65 is when RHA kicks in. And then RHA will cover your needs for long-term care until you pass away. So when your needs are changing, you can have CI as a very inexpensive CI as a stop loss strategy, while you're as an asset protection strategy, like I mentioned earlier. And then you have also a long-term care policy with you. Because you might not have a critical illness need once you hit 92, 93 years old, right? So long-term care might be much more important at that point. So you take the same premium from T100 and you just do two different products. So it's a good opportunity there to really help clients on living benefits. And long-term care conversion, I'm going to really focus on it as well, because it's something that clients need. The government needs it because the government doesn't want to bear all the costs. And the client really needs it, but it's so undersold. So long-term care conversion rider is really nice. Just to quickly go through the case study in the PowerPoint, now that you've seen the illustration tool. So it's really Sarah, age 5. And we have Julie and Doug Miller, who are the parents, and they really want a flexible plan for their child. So they want a $100,000 phase for term setting 5 with ROP and owner waiver option. The owner waiver option can be added for one policy owner, and it's included for Doug. And we're assuming that. So total cost is $70.51 a month, which is less than $2 a day. We used to say that it costs less than a coffee a day, but now a coffee at Starbucks is like $8 to $12, depending on your choice. I had a coffee once that cost me $18. Please don't ask me why, but it was a complicated order. So yeah, definitely way less than a coffee a day. Julie and Doug get 75% of their premium back at age 25. They essentially pay for 25% of the cost. But if you're like a insurance geek like me, you can analyze it. Is it worth it? What's the rate of return behind it? What happens if inflation gets factored in and all that? So you might want to dig into these numbers more than my PowerPoint does. And I have a lot of fun digging into these numbers. And really, the coverage and lower premiums are really locked in, right? Even if Sarah becomes uninsurable later on. And yeah, Sarah doesn't need to reapply as an adult. The policy automatically continues. So some other things are good to know is a little bit about our industry. So I've mentioned this before. Sun Life is a standalone child policy. It's pretty rare in the industry. But yeah, we're all for it. We're either quarter per quarter, we're either number 1 or number 2 market share for this. And we really believe in a standalone child policy. So that's why I'm here promoting it. But it's really an effective plan. Canada Life offers something, IA offers something, Manulife offers child CI riders only. But I think this slide is the one that I think you care more about. It's about the pricing overview. So feel free to get a screenshot of this for the pricing overview of, and you have age 0 to 12, age 13, and age 16. Just to describe this is T75, T100, and T100. So they're all $100,000 face amount. But T75 life pay with ROPD, ROPC, T100 life pay, ROPD, ROPC, and T100 15 pay, ROPD, ROPC. And 15 pay, I see it really popular in the Southeast East Asian market. But all other markets, I think T75 is the most popular one, at least in my experience as a wholesaler. So smoking, this is a question I get a lot. I mentioned a bit before, but I want to talk about it again. So at issue, so Sun Life will assume the child is neither a smoker or a non-smoker. So it's not a smoker rate that a child has. Okay, so that is a big misconception. We do not have child rates. We assume that they're neither. Okay, they're neither. So, well, smoker rates will automatically apply to the policy after age 18. So when you're running an illustration, you have the choice to show, right, either smoker or non-smoker rate after age 17. So that is all totally in your hands to control. So the client's responsibility to apply for non-smoker rate once at the 17th birthday. Like Sun Life, we will nudge the client, we'll remind them of this, and also we will send a message to the advisor on the advisor site. And the form is the E3331 smoker form. So you fill that form and really you can continue on with the CI at non-smoker rate. But I do see a lot of clients and advisors complaining they never got the notice. So it's maybe set a calendar reminder if you have a CRM tool at the 17th birthday. But we will do our best. For sure, we're going to reach out to your clients. So make sure your client's address are up to date in our system. So because for sure we're sending this notice to the information on our system. Okay, but for sure. And really is another popular method that I see people selling CI is grandparents offering this as a gift, right? A lot of child parcel like this, child CI is really gifting. So again, in terms of financial underwriting, anything below $150,000 of coverage, the parents we don't financial underwrite. We don't need parents to have any coverages. So you can feel free to give that as soon as 30 days. 30 days when a child is born, get the child insured. It's so important. It doesn't cost much and it can save you a lot of headaches down the road. Worst case, you don't want it later on. Hey, that's totally up to you. But I do believe any child at 30 days of age should get a child CI. I fundamentally do believe in that. And for supporting material, I've talked a bit about it today. We went through our advisor site a lot, but we do have client guide. We have a best doctor brochure. And another thing I want to show you is really, let me go back to my browser and let me reshare my browser. One other thing that I really want to show you is I do have a lot of comments on the definitions. So under product, still under marketing. So product marketing, you hover over it. You go into health, critical illness, and you do have our definition page. So it's a 24-page booklet, and we definitely encourage you to review this. So these are the new definitions. We had a update a few years back, and it's really the standardized definition developed by the CLHIA. And it's all here for you to use. And it's really sadly, okay. And that's why I still believe in disability as the fundamental human capital protection insurance, because CI is definition based. But it's really good. Like if you're into light readings, it's a really good read, and it really makes you understand the coverage even more. And especially for cancer definitions, I get a lot of questions on that. I get a lot of definitions, questions on waiting periods. So the waiting periods are all in there. For Sun Life CI, I recall that we've taken away a lot of the surviving period, the 30-day surviving period, except for heart-related diseases. So you'll see in our advisor guide there, and in the contract is the time period is attached to the specific illness. You can see in the contract as well. So we've taken away a lot of the 30-day surviving period requirement, unless it's a heart-related disease. I think those are the only ones that Sun Life have a 13-day waiting period on. The rest have taken it away, and that's also another industry trend. A lot of insurance carriers are doing that under CI policy. We have some email newsletters from my advisor site you can download. And really, that's it for me today for child critical illness. I'm opening up to questions. please feel free to type your questions in the Q&A box. I'm going to open up chat too to see if I've missed anything. But so far, so good. I don't see anything.
One of the takeaways that I have with, obviously seeing that there is obviously like there's a number of there's not a lot of carriers, but there's enough carriers that are sort of in this space. And, I think that, when we look at living benefits in general, critical illness, disability, things like that, it can be, quite complicated for our advisors to make an informed decision and to, understand the differences in the contract and, the benchmarking or the wording, the definitions. And I think this is one of those holes that, we as advisors sometimes choose to stay away from this. And, Sun Life has done an excellent job of basically taking all of that worry, away from us as advisors with offering one of the most robust plans that gives the flexibility while that individual is transitioning from a juvenile to an adult. So, it's certainly Sun Life has always excelled in that area. And obviously you guys are continuing to do that. So one question I have, Yusudan, is Best Doctors, or is there a version? I know there's probably the version, or is it the original Best Doctors, I guess, plan that's built into your CI?
Yeah, it's the original one. They're just rebranding. That's a great question, Dave. And it's the Best Doctor service offered by other carriers as well. The thing differentiating carriers with Best Doctors is who have access to it. Right. So for us, it's up, down, left, right. So let's say if an adult has Best Doctors, if an adult buys CI, their parents, so grandparents have it, their children have it, their spouse has it, and I think their mother and father-in-law has it as well. So it's really how much did the insurance carrier pay for the accessibility of it. Wow. But it's the Best Doctor. So with child CI, parents for sure.
Right. Well, that's great, because I've had the fortunate or the unfortunate pleasure of working with, obviously it's never a good thing when you're working with somebody but Best Doctors or a claim in general, period. But I can say that I've had two very close involvements with them, and obviously it's it's a very emotional time for everybody. So I know we're talking about product right now, which is of course in terms of the benefit itself, but that to me again is a big decision maker for me whenever I'm working with an advisor and sort of picking which is the carrier that we should be going with. And Best Doctors is one of the key things that I always try and bring up with them, because we've heard number of stories over the years where another option has been given, and maybe that option I hate to say it, but in Canada, of course, we're only given the options that are available to us in Canada. So, but we know full well that there's all kinds of great things happening all over the world. So for your file to be passed on to the original Best Doctors team at, I believe they're still at Harvard Medical School, University, and but it's pretty neat to see the process and the chain of events that happens in order to get your client's file onto the desk of that Best Doctor somewhere in the world who is treating that particular type of illness, which is again, knowledge is power. And of course, we're able to provide you with the funds in order to get that treatment, but without knowing, we're limited to whatever it is that our doctors' tool belts are here in Canada, and whatever treatment programs that they have access to. So that's great.
Yeah, thanks, Dave. Yeah, and what's surprising is Best Doctors, from what my health product team are telling me, they're so underused. Like clients forget they have this service.
They do.
Yeah. And especially if you're not the insured on the policy, you have access to the Best Doctors through a family member. And you're having an illness. It's not serious, but you want to have a second opinion because your doctor here is not caring about you or stuff like that. you have it through a family
Yes.
member. Yeah, they
Yeah,
forget it's so underused.
Yeah,
More
my experience with it was the doctor said to me, you know, tipped his head and looked up through his glasses and said, "How did you get this?" And I was like, "Well, it's part of a service that we have, and I'm in insurance." And that doctor, who in Canada was the best known doctor to
Mhm.
treat a particular type of situation that our family was working through, but he said, "Yes, I know exactly this doctor. Him and I have shared the stage at many different
Oh,
events all
wow.
over the world, and this particular treatment is not available yet, but there is a hospital that is in the process of assembling a pilot project, and would your family member want to be part of that?" So, and again, but without knowing about it, we would never have been able to given the opportunity. We didn't end up needing it, but still,
Yeah.
knowledge is key, and that's all great. So I think I don't
We're
know if there's any more
good.
questions that are
I'm
coming
gonna
through
check
here.
one more last time. Oh yeah, Q&A box. Oh, there's someone asking Sun Central software available. Yeah, so yes and no. So I'm gonna go back to the site and show you. So you please register for Sun Central. It's finally fixed. Oh my God, it's finally fixed. So if you register here, you can register here and get access to your illustration tool and software. If you do not have an advisor code or Sun Life are not contracted in Sun Life, you can put 6 zeros, like something like 1, 2, 3, 4, 5, 6 zeros in the advisor code. You'll have a temporary access of 30 days to our illustration tool, to our e-app, to everything behind a firewall. So basically that temporary access allows you to really use everything behind a firewall. So it's really nice. Yeah. And it's finally fixed.
Excellent. Excellent.
And that was the last question.
Excellent. Well, I guess in closing here, thank you again for everyone who's attended today's session. Very informative. Of course, I think anytime that we have a chance to get re-energized, hearing you speak and running through these products, it gives us an excuse to pick up the phone and go out there and call some people. And clearly we know a number of families that we can help, with these products. Thank you again, Yusudan, for coming out. Love the microphone. I got to figure out where I can get myself one of those things. Yeah, I guess. Do we have any more?
Oh, did you see a note?
Yep.
Oh, yes. Do you need first business to be contracted? No, since last year, no. But this, I'll leave it to Dave for the IDC process. But since last year, no.
Great. Yeah. So if you want to get contracted with Sun Life, it's quite easy. Go into your Apexa profile, request new contracting, and the rest of it is done internally between our two offices. So that's an easy one. That's the easiest question you've had all day, right? So
yeah.
So yeah, but anyway, thank you for everybody for attending. Feel free, reach out to your local business development executives at IDC Worldsource. Of course, the team at Sun Life are there at your disposal to help us and you get as many people as we can protected and covered. And obviously, it's not a charity, so it's obviously to help you generate some revenues too as well. So, without further ado, I guess we'll end it a couple minutes early and let everybody get on to their day. Stay away from the smoke, keep your windows shut and the AC on, and hopefully this is all over soon. Stay safe out there.
Thank you so much, Dave. Thank you everyone for listening to me. Bye.